Well, our next guest expected some market weakness around the Alibaba IPO, but longer term, she says she isn't losing sleep about things. Diana Avigdor is Vice President, Portfolio Manager, and also Head of Trading at Barometer Capital Management, and she joins us now from the TSX. Diana, good to see you. Thanks for joining us today.
Thanks, Catherine. Hello.
Let's talk a little bit about this. Weakness today, certainly, but it was interesting as well, Diana, because on the TSX late last week, we also were seeing the TSX decline. Some people were saying it was a program trade exiting out of Canada in one large position. What's your take in terms of what's actually going on?
When we talk about markets, we tend to say markets are, and then we don't differentiate between U.S. and Canada, and often they go together because it's North American flows and so forth. But I think that we're in a situation where we need to differentiate because it's two different stories. The TSX is hurting because of its big weight in the metals and mining, and yes, to your point, there's been some large TSX 60 programs have been seen from non-domestic investors. So global vanilla type of, it could be a big mutual fund or pension funds that are exiting Canada because of the exposure to the commodities. We know that commodity trade, the commodities have been the weakest sector, really underperforming. And then when we look at the U.S., there is so much more diversification in that market in the form of all the different technologies, healthcare, and financials that are coming out of a different situation than our own financials. So two separate stories.
Definitely two separate stories. Let's stay with the TSX, though, for a moment. It seems as though last week we had some trading that was putting pressure on the TSX, but certainly over the weekend, comments out of China basically telling us, telegraphing that they won't necessarily stimulate the economy, even if in fact the economy needs it. That's sending global markets lower. What do you make for the TSX right now? Is it a knee-jerk reaction? Is there a buying opportunity right now?
I think at some point there will be a buying opportunity. There are sectors that we need to avoid right now and sectors that we need to be invested. The U.S. right now is the better place to be invested in, and that will eventually trickle into Canada as our biggest trading partners. If we look at the Canadian dollar, for example, we look at how weak it has been and how strong the U.S. dollar has been. But really, if you look at the Canadian dollar globally, it has been the least weak currency of all the currencies. The Australian dollar is much weaker, the euro certainly weaker, and so is the yen. So the U.S. dollar strength has hurt currencies globally, and yet the Canadian dollar, although weaker, is the least weak of all the other currency because we're a major trading partner, and eventually the slowness in the commodity trade, the weakness in the commodity trade, oil going lower, is a major boost to the U.S. Consumer. 2/3 of the U.S. GDP is consumer, and so this could be fairly helpful, which eventually will trickle into our markets in the form of trade and all kinds of things like that.
So it is interesting, Diana. Some people do talk, of course, about the positive impact that a lower WTI price can have on the consumer, and as you point out, the U.S. consumer. Does that mean that you're buying consumer discretionary stocks in the States?
We do have some. We buy financials. We're overweight some of the technology. Healthcare definitely is acting very well, and we continue to be there. Some of the U.S. financials have really cleaned up their balance sheet. Citigroup, for example, has been denied twice to pay dividends, but eventually we think they will. Bank America also is very levered to the economy. Our own banks, steady, solid. We discussed this last time. Their earnings were great. There has been some softness across the board, but relatively speaking, they're holding up pretty well. So 2 steps forward, 1 step back. We have economic data that's coming. We think that overall the economy, the U.S. economy is doing well. I might also mention that one of the things that we think triggered this, of course, is the carry trade out of Europe. Europe has been the big surprise this year. The weakness in Europe has been the big surprise this year. But we think that the U.S. dollar continues the strength, and the commodity trade eventually seeps into the consumer.
Diana, let me just get your take then, be a little bit more clear perhaps, with respect to Europe being weaker than expected in the carry trade. What specifically are you seeing investors do that are apparently, and we're seeing it move the markets?
Right. So I think about 9 to 12 months ago, the narrative that we've been hearing is that Europe was going to catch up with the U.S. multiple expansion story because global growth was on the mend. And then what we have seen is that it wasn't global growth that was on the mend, it was just U.S. growth that was somewhat on the mend, and I'm kind of putting it in quotes because, you know, the growth that we're seeing is pretty tepid, but okay, we'll take it as the best available. And Europe has really not panned out, and there is geopolitical impact out of Europe. And you know, we were expecting some kind of QE, but that was not coming, and now eventually is starting to seep through. So the European growth did not pan out. The euro was holding strong for much longer than most people anticipated, until finally it gave way. And so you have rates in Europe that are negative with a weak currency, and the U.S. Treasury is still at 2.5% with a stronger U.S. dollar. That is the perfect carry trade. You sell the euro, there's no interest rate there, and you buy U.S. dollars for 2.5%.
Diana, one last quick question here, though. With the energy sector being hit quite severely over the past number of weeks, and certainly last Friday and today as well, are you looking at any energy names in Canada right now?
Not for new money, no, not right now. There will be an opportunity, I'm sure, at some point, but there are better places to be in right now.
All right, Diana, we'll leave it there. Good to see you. Thanks so much for joining us.
Thanks for having me.
That was Diana Avigdor, Vice President, Portfolio Manager, and Head of Trading at Barometer Capital Management.